Hey traders, happy Monday. Chris Pulver here with a weekly outlook. The week of July 27th through July 31st. We're going to have the official end of the month on Friday. It will be nice to kind of get some of this summer trading out of the way, some of the slower movement that we've seen, lower volatility, less liquidity. Let's see what August gets us into as far as picking up in some movement. If you're interested in another very busy earnings week, we certainly have it. So Monday through Friday, we have a lot of notables. Today, some of the notables, SAP and Hasbro. Tuesday, we have Starbucks, Visa, Pfizer, McDonald's, 3M, and eBay. Again, what I'm looking for here is not necessarily to trade, individual earnings unless you're looking at a straddle strategy, but to really see as a whole, how are earnings stacking up going into the election year. Again, November 3rd is going to be a huge day in the markets. We're trying to get out of some post-summer trading. I'm assuming that the second week of August, mid-August into September. October is usually a very volatile month in the stock market as we are entering into that election cycle. Wednesday, Facebook, Spotify, PayPal, Boeing, General Electric. Thursday, we have Amazon, Apple, Alphabet, Procter & Gamble, AstraZeneca, AB InBev, MasterCard, and Comcast. And Friday, we have Merck, Exxon, Chevron, Pinterest, Under Armour, Colgate, and Fiat Chrysler. So this packs 3 weeks in a row with heavy earnings, tons of market cap up for grabs, and how is the overall health of the U.S. economy? We will see. So without further ado, let's dive into those charts. First things first, we understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. If anyone's out there looking for a reputable and legitimate regulated broker for your trading needs, I would highly recommend that you talk with my good friends at forestparkfx.com. If you're a Forex trader, Forest Park is a great ally to have in the big bad world of trading, whether it's something as simple as getting a rebate, improving your bottom line, having a broker-sponsored VPS, which allows you to trade automation with something complimentary as opposed to paying 50 to 100 bucks a month for a VPS service, and also working with some of the top regulated brokers in the world so your money is as safe and secure as possible with the best liquidity options. So anyway, that's forestparkfx.com. You can just email them, support@forestparkfx.com, and I will spell that out here, support@forestparkfx.com. All right, let's go into the charts here. Quickly, if you're following me out there on social media, Instagram, I post this video, my weekly outlooks and others on IGTV. You can follow my handle, send me direct messages on Instagram at pulver.chris. Follow me on Twitter as well at pulverchris, Facebook, YouTube. Just type in my name and that's my face. All right, keep it seriously simple video series, free education on trading on YouTube. I'll continue to build that out. Let's get into the charts here. Earnings reports, if you're interested, really helpful website, earningswhispers.com. Take a look at the calendar. This was all of today's earnings Monday. Look at the actuals compared to forecasts, see the earnings per share, revenue. So I'll be watching this each day through the week in my trading room. Also want to get into the charts here. And let's go. So I'm actually going to clean the charts up a lot and just start from scratch, anything that I can find. One thing in particular, let me get myself out of the way here. One thing in particular with some of my favorite trades for the week, I am looking at the Euro Swiss. I've been in a position trade for this one for quite a while. We're at 108.25. And all I'm really looking for on this Euro Swiss is a run back into 1.10. So I'm going to continue to run with this Euro Swiss. We have a low to high, a pullback. We're looking for this to push up into 110, 110.50. So I continue to stay long, but I will keep aggressively taking profits along the way. So let's take this down to a daily chart. You can see this pattern pretty nicely. So we have been long since this falling wedge and took a nice run to the upside towards 109. I'm looking to get back towards these previous highs at 110.45. So here's a wave one. We have another falling wedge corrective move. We have another push to the upside. So I did take some partial profits today around 108.30. I'm looking for a pullback, another pullback, another pullback. Anything in here, I'll just go ahead and use some, pivot levels. I would use some structure levels. If we have a wave to the upside, pullback, if we have any pullback that's a higher low, I'd look to buy that. If we pull back to equal lows, I'd look to buy that. If we pull back to equal lows, I'd look to buy that. My trajectory and my prediction for this currency pair is to get up towards the highs around 110.50. So it is now in the go zone where I'm trying to buy, take some profit, buy again, take some profit, buy again, take some profit, keep adding to my positions, maintaining a base, which I do have from anywhere from 108 down to 106. So I have a base position that I'm building and I'm adding to, But as I'm adding to it, I'm taking some previous trades off the table, adding some new ones, trying to keep my lowest possible positions running for the biggest possible profits. And again, destination wise is 110 or higher. So as long as we stay with this trajectory right now, Euro's getting stronger. The Swiss and the dollar are very weak today. You can see that on the currency strength chart. We have the yen and the euro on the high side. We have the dollar and the Swiss on the low side. Quite interesting to see that mix. Volatility wise is probably medium today, but it's interesting to see the yen and the euro moving stronger today, while the Swiss and the dollar are weaker. So we've had a pretty pronounced run in the dollar the last couple of weeks. The euro dollar, for example, is up above 1.17, which is a pretty large run, considering it was in a 2-year channel. We're now starting to see some movement to the upside, and the timing of this is a little peculiar. Why is the dollar really trending as aggressively as it is in the middle to end of July? I have no idea, but it is, and I'm not going to fight it. So this is kind of that post-summer breakout as we creep into August. Are we going to end up establishing some tops and bottoms in August, where some of the movement that you're seeing right now will start to balance back out? Or is this the start of the post-summer breakout where these trends are getting underway and we want to follow that momentum as we get into August? So Euro Swiss, I'm still long. I'm going to stay long, targeting 110.100, 110.50. I'm going to stay bullish on this pair. The pound Aussie is another one that this week it is looking to pay out quite nicely. Even on a smaller time frame, I'm looking for pound Aussie to get up towards 8,100 or higher. We do have a lot of upside on this pair as far as just a correction goes. Now, if we have a 1, 2, 3, and that gets us up into 8,200, 8,250, I'm probably going to take some profit. I do have some equal lows that we bought in my trading room around 7,900. We've been adding to this around 8,000, so we do have trades in profit right now. If we come back to a previous high, that's around 8,200. I would go ahead and take some profit in this one and then just be fairly neutral going into, are we going to have a larger, August correction against the Aussie? Are we going to have some risk off trading coming into August, September? Not entirely sure, but I know that probability-wise on my pound Aussie, I'm looking to take this one up towards, yeah, we're creeping up there. So I'm looking to take this one up towards 8,100 as of right now. If we get to 8,100 today by 5 p.m., I'm probably going to take profit at about 3 orders and look to re-enter and stay long. So this to me is a bullish trade in the near term that should be paid out this week. We have a nice bar count, some nice extremes, and that's what I'm planning on for the highest probability trade. If you look at this daily chart, see this high, see this high. If the bulls come back to challenge those highs or score a point at that high, that's where I'm going to look to take some profit. So I'm going to keep it really simple, come back towards previous highs, that's 81.90. I'm going to take some profit. If we come back down and form a bullish pattern, we pull back, we can buy those dips and take it up higher for a corrective move. If you think of this overall swing from high to low, and we just balance this out. So if this is a large swing from high to low, and we're just kind of looking to establish where exactly is the low. This is a nice swing low that drifted a little bit lower. This is a swing low that kind of established more of the pronounced bottom. So anywhere from this level, I would expect pullbacks into this 23%, 38% area. If we drag this down to the low from last week, same thing, 23%, 38% area. So even from a correction cycle, there's a decent amount of space to the upside. 382, that gives us upwards of around 300 pips to the upside for a very conservative pullback. 8,800, that's another 800 pips higher on a pullback. But keep in mind, we have also dropped 2,000 pips. So dropping 2,000 pips and pulling back 300 to 800 pips is not a lot. It's all relative to the percents, and that's our swing. So I am bullish on pound Aussie in the near term. I am also bearish on the Aussie CAD. So I'll talk Forex now, and we'll get into some stocks and indices in a moment. This is actually a really clean looking trade. We have 3 monthly targets and 3 monthly pivots to the downside, the nearest of which is for the month of July. It's at 9326. Let me verify that. 9326. So if I'm writing down a number for this Aussie CAD in the short term, we're trading as high as 9,600. 9326 is a 250 to 300 pip move to the downside. Now, another way to look at this chart from structure is if and when we see a nice daily candle close on the right side of that trend line, I want to be bearish. So if we can get a break below that trend line, I will be bearish into that 93.26 monthly target, back into this previous low, back into these previous resistance and support levels. I mean, I really think we can come down towards 9,100, and that's what I'm trying to set my sights on. But again, as a trader that's been shorting it at highs and has a pretty decent break even around 9,400, if we come down to 93.26 or lower, I'm still in the money. If we come down to 9,200 to 9,100, definitely in the money, looking to take some profit in there on that Aussie CAD. So Aussie CAD, I do remain short this week. Aussie Swiss, I know some traders last week were talking about shorting this one at an equal high. We were right there. The Aussie Yen, we talked about shorting at an equal high. There it is. That was a great trade from last week. And well, we did take it actually. We took it with a scalping system, and it's working out quite nicely. If it ends up breaking, that line's not very straight for some reason. If it ends up breaking that trend line, we have a nice respected resistance point. We can end up falling right back down into these lows. So we have our mid-June high. We had a retracement or correction. We go up and spend, pretty much all of July just slowly drifting higher. We get there, and then some more volatility kicks in with that stronger JPY and a weaker Aussie. So I'd look to see if the Aussie yen continues to head back into equal lows, which gets us to around 7,300. If we can slide into 7,300, that's just a nice range for the summer. But what a great spot to sell it right at the highs, equal highs getting tested. New Zealand yen and New Zealand Swiss looked almost identical. Let me go to New Zealand Swiss for a moment. We didn't quite hit the equal highs on the New Zealand Swiss. We have a high right here around 62.80. We didn't quite test that high for that drift in July, but that's still a spot I look to sell. New Zealand yen did. So New Zealand yen offered that very clean double top look. A lot of resistance there. Equal highs around 71.50. Nice chance to sell it right there at the high. Stop area nice and tight. Going to the downside. Again, targeting previous lows. So we have previous lows right here. We're breaking a trend line. Nice little resistance point to sell from. Stop area above. Go after that range trade on the New Zealand yen. Okay, the dollar has been the story the last couple of weeks. We've had this sneaky little move on the dollar, but I say sneaky, but we've gone from 112 to 117, almost 11800. Now, is this a permanent move? Is this the end of the dollar? Probably not. This is a move that should have happened, right? I mean, all this lack of volatility that we've seen for the last 2 years. I mean, look at this ridiculous channel. Finally, the shakeup in March got this thing running, and unfortunately, we didn't have the friggin' pullback that we wanted. That's what makes me so disappointed. For a pair that's usually extremely efficient and low volatility, it would have been a great spot to be buying right in here around 110, which was in fact a breakout point. We had 108 to 110 ranges for about a month and a half. We broke out of that. We never came back to retest it. Now, although this is running to the upside, I would be long, right? If you're long right now and you're scalping euro dollar to the upside, that's great. Look at where it's going. We're probably coming back to equal highs here. Let me use some straight lines, in fact. Let me use straighter lines. So we're probably coming back into 118.50, upwards of possibly 122. Now, again, that's a big area that I'm looking at the high, but I would imagine that some of the inefficiencies that were formed back in 2018 are going to be balanced. Now, having said that, if this euro dollar comes back into, let's say, 120, 120 is a firm level and a nice psychological round number on this euro dollar. This also gets us back in kind of the midpoint of this inefficiency from 2018. Now, because of the last couple of weeks, this is a weekly chart. Look at last week's trading. Look at the week before that. Look at this week's, how it's kicking off so far. Really aggressive move to the upside. Now, if we get into 120 to the same highs back here in 125, I'm probably going to be short the euro dollar. Okay, but not just to say I'm going to put in pending orders. I want to see some confirmation. I want to see, does it end up stalling at some of these levels like 120, 125? We will see. If you don't want to trade the euro dollar, you're not going to hurt my feelings. I mean, this pair has pretty much hypnotized traders into doing nothing for the last 2 years, and all of a sudden now it's starting to react and behave quite differently. And like I said, timing-wise, this is really strange to see a late summer trend like July. But I also think this is where we're going to establish some of those tops and bottoms, and we'll transition either with a summer breakout that continues, or we'll end up creating a balance point, and then we'll end up giving it all back by the end of the year. Not sure yet, and we'll be positioned accordingly for it, but this is a good trade to be long and staying long and not fighting this, and we're likely heading up into, I would look at 120 as a nice little destination in the interim. We could certainly go up to this pocket inefficiency around 122. So there is room to the upside. The problem is it's not really offering many dips to buy. It has been that aggressive. We've seen multiple daily candles in a row. In fact, this is a daily chart. We're now seeing 1, 2, 3, 4, 5, 6, 7 daily candles in a row. Anywhere from 7 to 11 candles in a row means I'm looking for a short-term drop. Let it get overstretched, right? I mean, let it go, let it get overstretched. Would I fade it if I'm selling this move? I would be very aggressive on the profit protection. I just think it's something that right now, don't fight it. Don't fight it. Don't fight it. Don't buy it at the highs. Don't buy it at the high. See if it pulls back. If it pulls back, we can look to go long. If it pulls back here, previous resistance. Look and see if you can establish some bullishness, and then look to go long and identify a stop area. This isn't something we have to chase, right? We're just clearly seeing a weaker dollar. Now, on that note, typically the euro dollar reflects bullishness, and you can look at the dollar Swiss, and that will reflect bearishness, and you can see that's happening here as well. So the Swiss is just as weak as the dollar today, unlike the euro. The euro and the yen are stronger. Okay, so dollar Swiss is back down towards equal lows. I did get a buy position filled at 92.50. I'm holding the dollar Swiss long for the medium term, and I'll show you what that looks like. Here is my outlook. Let's go to the weekly chart on dollar Swiss. Okay, now we have a ton of support over here. Right there. Right around that 9200, 9250 zone. Lots and lots of support. I also see the last week's candle. Last week's candle on the dollar Swiss is a very large inefficiency with multiple candles to the downside. 1, 2, 3, 4, 5 weeks in a row bearish. So if I'm hopefully seeing some support levels holding here for the dollar Swiss, I'm taking that long back up into 9600, 9700. I am planning on staying long on the dollar Swiss. If we come down a little bit lower, it's not too much lower that I would see it going. I do see from 2015, our flash crash on the Swiss franc, we could come down as low as around 88.50. I would not forget about a potential flash crash if this is just, all hell breaks loose on the dollar and we're going to see just this crazy trend and it makes no sense and it's irrational and the timing's weird, but it's still trending. We could come down to those lows from 2015. However, I do think that current levels, the dollar has a chance to bounce. If we drift and go lower, this large 2015 candle gets us down to around 88.50. I'm still going to buy it there. I still have a medium-term outlook to stay long. If I hold dollar Swiss short, I can get paid on volatility. That's great. But if it doesn't do much of anything, let's say it comes down here and stalls for the next couple of weeks. Well, me holding on to a negative swap position is just going to cost me more money to hold it. So if I'm going to hold a position, I at least want to get paid positive rollover to hold it. So my choice is to buy low, buy low, buy low, and have this thing just stay in a big range. If this is a range low, this is a range high, either this level bounces, or this level bounces, and this major support, which can now become resistance, is something that I can accumulate some positions, take some profit right back in here around 92. If it goes up any higher, we have a lot of past support resistance around 95. So there are tons of levels and structure inside this dollar Swiss. The faster it falls and the more inefficient it falls, the more I want to buy it and hold it. Which is what I'll do. This is what my position is going to be on the dollar Swiss. It's a long-term, medium-term to long-term buy position. Get some positive rollover from the broker and hold on to a nice trade that will eventually come back into 93.50. Will likely come back into 95.50. And if we're going back to range highs, we're going to get back to parity again at 1.00. So currency pairs for me that I'm focused on this week, I'm looking for the pound Aussie to pay, and that's going to be 1.8100 or higher. I'm looking for the Euro Swiss to pay. I'm going to say partial at 10900 or higher. Again, that destination is 1.1000 to 1050. Also, the Aussie CAD, we have the 9326 monthly target. I'm willing to hang on to it until it gets there. I still think we're going to drop into 9200 to 9100. Those should be, I'm going to say, pretty big profits from positions that I've been holding between 94, 95, and 9600. If we get paid between 9300 or lower, or in that window between 92 and 9100, that's going to be a nice chunk of profit for the Aussie CAD. The New Zealand CAD is another one. I expect this one to drop into 8,600 or 8,550 area. I'm bearish on New Zealand CAD. I'm bearish on Aussie CAD. I'm trying to think anything else. The Euro's doing quite well. Euro Aussie's been bullish for us. Euro New Zealand's been bullish for us. Euro dollar, don't fight it right now. Don't guess where that top is. I'd rather trade the dollar Swiss. If I'm going to pick one, I'm going to trade the dollar Swiss and hold it long. versus trying to fade or short that euro dollar, because volatility can quickly change on the euro dollar. We can go from 50, 60 pips a day to August. All of a sudden, we start seeing 70, 80, 100 pips a day on the euro dollar. That pair can easily climb irrationally towards 120. So I would stay bullish on euro dollar, not fight it. Wait for better confirmation if you're interested in shorting. And then other pairs, just pick and choose your battles. I'm looking at a lot of robot trading here over the next couple of weeks. I've been trading range conditions with my systems called the Perfect Storm, which trade range, range bound markets. I also have an equalizer. Those have been making a ton of pips. I'm talking thousands of pips over the last 3-4 weeks. But those conditions are going to change, and those robots are really good at trading tight conditions. They're really good at trading ranges. So I have them on a select few currency pairs. So in order to avoid them getting into too much trouble, probably at the end of this week, I'm going to start turning those robots off and start focusing on those August breakouts. So it's going to be an important week to make sure that you're in the trading room with me this week, and we talk about some of those big levels and watch those areas closely. When it comes to the stock market, let's go into stocks really quickly. Like I said, you can watch on earnings whispers to see what's happening for particular stocks. I'm still waiting for dips. To be honest, I'm still waiting for dips to buy. I would love to buy the SPY. I'd love to buy, Vanguard ETFs as well. I'd love to get something healthier than a, 5% off the historical highs. What I think we're going to be doing here is, as we head into the election over the next, we're like 100 days away. So we had this gap right here that we've come back to find. Great. Now we're probably going to see more indecision, right? I know that Congress is working hard to roll out another stimulus package. If they do that, I'm sure the markets might love it. They might appreciate it, even though coronavirus is certainly not under control here in the U.S. But are we going to still make it a reason to come back to these highs, find the high, have more uncertainty? We may not see a crash or a significant sell-off until October. One thing that's probably pretty interesting about October is historically it's usually a terrible month for stocks. So it's usually a sell-off type month as we go into a holiday rally. They call it the Santa Claus rally for a reason, because it's recovering most of what October gives. Now, from this 40+% recovery from the bottom, will October be, August, September, October indecision, volatility, low liquidity, lots of indecision, and then October is a sell-off, and this kind of concern gets us into the election, which then ignites a bigger move to the downside? Or is this simply going to be sideways, 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 no clear direction, and then in and around the election and post-election, we have a break either way? So, I am going to be positioned pretty neutral. I want to make sure I have lots of margin available to trade in stocks. My equity portfolio, I want to have lots of cash ready to trade. I'm not looking to buy, the immediate dip. I'm not looking to buy the immediate dip. I'm waiting to buy something big. I want to buy something big. This could be, a much larger extreme to these lows and these highs, but this reminds me a lot, I've said this last couple of weeks, of 2015 and 16. Look at this indecision. Okay, right here, we had indecision. It was about a 20% level. From these lows to these highs was about 18 to 20%. So we've just made it more extreme. We have, from top to bottom, we're looking at about 40%. But we could have the same type of scenario. We could have tops here, bottoms here, and, selling high. Do we buy the dip? Do we buy the dip? Super interested in buying indexes at the lows again. If this becomes a, truly a broadening formation, then it would look something like this, where these lows get lower and the highs get higher. Okay, but don't be fooled into thinking like the bottom is in. I don't think that the bottom is in. I think that we're going into a very contentious election. I think there's going to be a ton of volatility around it. It's just a matter of how do we position ourselves? How are we going to be applying the risk? Right now, I'm very risk averse. Once we get into this area, I'm very risk oriented. Risk appetite looks great at a better price. Companies that I want to buy, they look better at better prices, not right now. So I would love to buy more Amazon. I'd love to buy more Apple. I'd love to buy more Microsoft, but not at these current levels. So that cash will be applied when the opportunity presents itself. Stock market wise too, I'd love to buy dips on the indices when it presents itself. One thing I will be looking to trade is volatility. So the VIXI, the TVIX, we are coming. This looks like another great pattern. Now we have some wild swings, and we have to be careful on some of these if they are double and triple leveraged instruments. I do think that volatility is going to be here to stay. If anyone was interested in buying this VIXY, could we go higher from here? Probably. I'm really watching, maybe it doesn't build the lows here, maybe it does. But if we come back down into lows from February, when this thing erupted from, $14, $15 into $60, that paid out pretty nicely. So we have lows around $12 and $13. I tried to buy it at, $10 and it didn't hit my even number. So I did have positions around 17, ended up taking this all the way up towards $60, which was a great profit. Now I'm looking for the revisit of, let's see if we can get back down, sub 20, below 20 bucks, back down into maybe 15, $14. I will buy this VIXY and I'll ride it up. You can trade options on VXX. You can watch the VIX instrument. We're going to have higher volatility. I think there's one thing that we can look at as kind of a guarantee over the next 5 months is that we will have volatility. Whether that volatility is, risk off and this goes crazy and the stock market plummets, or whether it's volatility this way where it can't really make a decision, but we have chances to sell and buy every single day. And the market essentially hinges on a major catalyst to be a full-on breakout. So like I said, it's a good time to be portfolio battle tested, right? I mean, make sure that bottom line is firm, have cash and have margin on the ready to use. But I think it's wise to start protecting positions, to start making sure you have plenty of cash and margin available, to buy at better prices, to sell at better prices, to play the appropriate instruments, to not be chasing. I think the markets, they like to make us think like, here we go. I mean, look, if you're going to chase, trade smaller and trade a robot. But as far as me with some of my discretionary trades, I'm still very picky, very peculiar. On what I trade, and I'm very meticulous on how I get into the market. So I will let some robots do some work for me. I do have a big plan from August to December to let some robots trade, but I will certainly quit when I'm ahead. If the robots are doing well and the robots are catching these big moves and we're enjoying those profits, I will quit when I'm ahead. I don't need to sit here and step on the gas the entire time. So if I'm trading robots, I trade smaller, I trade more conservative, but I let them perform and I give them the time and freedom and space that they need, but I monitor them. So that's it. Big earnings week in stocks for 3 weeks in a row now. Forex-wise, let's check the Forex Factory calendar really quickly to see. I know that we have a rate decision from the U.S. this week. So forexfactory.com. I think on Wednesday there is a projected rate increase, or a rate decision. There's no rate increase. Here's high impact news. So FOMC, they don't even have it forecasted this week. So let me go to the CME Fed Watch tool. This is something we look at in our room as well, the Fed Watch tool. There it is. So we have the Fed rate decision and press conference on Wednesday, and Wednesday is looking like a 0% chance of a rate anything. There's not going to be a cut. There's not going to be a rally. It's going to be the same rate from 0 to 0.25%. That's the central target rate for the Fed. Most likely that's going to stay the same, which is what we've seen from all central banks over the last couple of months. Once they started slashing rates back in March, they've all kind of maintained it from here. So there's no forecast, but again, don't be surprised that the statement, the rate decision is all the same. Press conference at 2:30 on Wednesday will be interesting, especially to wrap up the month as we get into August. August is a very important transition month. We tend to see tops and bottoms and breakouts. So if trades are consolidating, expect August to deliver some breakouts. If trades are extending, whether it's bullish extensions or bearish extensions, or we're getting to some of those higher extremes, expect those tops and bottoms to be forming. So that's what I'm looking forward to the next couple of weeks. Forex-wise, we should get paid on some profits this week. This will be a good week to let those robots run. By the end of the week, I'll make a decision to either turn some of my range trading robots off and be more, positioned neutrally heading into August. Stock-wise, waiting for cash to get put back into the stock market. I'm just trying to find out where. Most likely, I'm about 95% going to focus on volatility and then pick and choose my stocks that I want to trade on dips. I think we're going to get dips. I'm looking forward to hopefully seeing some corrections in dips. I just want to see how violent and how turbulent the markets get. But that's another reason to trade smaller, trade conservative, practice good equity management, and trade accordingly. All right. If you have any questions for me out there, feel free to, again, follow me on social media. Here I am. There we go. So you can follow me out there on Instagram. I'm a YouTube channel. Again, like the video, send a comment. The comments that everyone can see, I reply to them. You can also send me a direct message on Instagram. So I post this on IGTV, on my YouTube channel. Check out my video series, Keep It Seriously Simple. And more free education coming on YouTube and social media. Take care, everybody. Have a good week. Talk to you all soon. Bye.